as you understand these three volume bars, you can buy at the starting point of bankers pulling up. Not only avoid risk of chasing high to be locked, but also maximize your profits. Then, how to operate. This video will give you a detailed answer. Hello, I'm Lisa. Welcome to today's lesson. Please subscribe my channel, Happy Investor, so that you can follow me to learn some technical trading skills every day. The method I want to share with you today can stop you from chasing high and then catch bull shares easily and happily before the main rise. In order to verify your learning results, I will leave you homework at the end of the video, so you better finish watching this video. First of all, let's understand how the bankers push up the price and operate it. What signals does it leave for us to find? And what is the bankers pulling up? Pulling up is the bankers who use part of the funds to push up the price so that to create a kind of a profit-making effect, which can attract the retailers to follow in and help to push up the price so as to achieve their purpose of making huge profits. Pulling up usually occurs after whipsaw and before the delivery. Let's look at the chart for example. This is the bull stock, which is consolidated at the bottom. Pull up, pull back, and then rise again. Price up from 1.1 to 2.5, more than doubled. This is also the bull stock that most retailers regret not being able to catch. If you buy here, and then buy here, will you be happy? Do you want to catch these points? That's what I'm going to tell you. As long as you understand these three volume bars, you can make it. So from now on, you must listen carefully. Let's look at the chart with the volume below. It looks like normal with the previous one. No special, is it? But if you pay attention to the positions with the yellow rectangles, it will be totally different. Firstly, if you want to confirm the entry points, we need to find three volume bars. Three volume bars are special, which not only represent the cost of bankers, but also satisfy the rising points. That is, we need to catch the position where the bankers finish whipsaw and then start to pull up. Take a look at the conditions. Number one, the second day volume shrinks and less than 100% of the first day volume. Second, the third day volume enlarges and more than 100% of the second day volume. Number three, the third day volume also need to exceed the first day volume. I suggest you to write it down immediately since it's very important. Okay, let's check the conditions one by one. Firstly, volume shrinks and more than 1 time of its previous day volume. Secondly, the third day volume enlarges and more than 1 time of the second day volume. And number three, the third day volume also need to exceed the first day volume. So we can see the two positions both satisfy the conditions. Then once we buy, the first wave rise 50% within 12 trading days. And the second wave also have 30% profit in 7 trading days. Then let's take a look at another stock which rises slowly first, then rises quickly. Now tell me which position got the model, right here or here? In this position, we can see got this model, right? But here, some people may wonder what's the meaning of shrinking and why volume must shrink 100% compared with the previous day. In fact, the shrinking of volume shows that the bankers are testing the selling pressure of retailers. At this time, the smaller the selling pressure is, the better. Then, the volume on the next day enlarges 100%, shows that this is a sign of the banker's strength, indicating that the bankers is about to pull up the price. and achieves their purpose. Therefore, once appear this kind of a model, it's a very good buy point for us. Then, if we buy from this position, we can directly catch the next main uptrend wave with a rising of more than 40% profit. And what about the previous one? It's also fulfilled our model, right? If buy in also can get some profit, is it? Is it simple? I think the answer is definitely yes. Am I right? Now, it's time for everyone to check whether you have mastered the key points or not. It's not so difficult, right? Look at this counter. Does it match our model? Please leave your answer yes or no in the comment zone. Okay, let's make a short summary. Before the bankers pulling up the price, there are always some hidden signals. If we can find out, then we are able to catch the next uptrend wave. So the ambush bankers pull up model we learned today can help us to catch the starting points. That is, it needs to be met these three conditions. Number one, second day volume shrinks and less than 100% of the first day volume. Number two, third day volume enlarges and more than 100% of the second day volume. Number three, third day volume also needs to exceed the first day volume. Note, this method is most suitable for catching up the starting points of bankers pulling up. It's necessary to control your position before bankers delivery. Okay, hope this method can help you to get some profit from the market. By the way, remember to leave your answer yes or no in the comment zone. I will check it. See you next time.